reckon? Is the Fed done hiking?
Yeah, well, good morning, Martin. So for once, I kind of agree with Jay Powell that it probably is a bit premature to be talking about when the Fed are actually going to start cutting rates because, I think Fed policy is now so disconnected from economic factors and from reality that you just can't make any assumptions about when the Fed are going to wake up and start smelling the amount of damage that they're actually causing to the economy. So there's a lot of talk about when the first cut will come and how many cuts there'll be next year, and obviously the market's now pricing 5 cuts into next year. We have no idea whether they're going to do that or not. But I think what's for us, the really key point here is that the Fed are now so far behind the rate cutting curve that if they don't do 5 cuts next year, that's going to create even more damage. And it means that we can be, pretty certain that the rate cutting cycle is going to have to be more extreme and more protracted than if they do get ahead of it. So I think, whether we talk 5 cuts next year or not, if they do, then we're probably limited to having to need something like maybe 8 or 10 cuts in the cycle if everything plays out for them. If not, then we could be seeing rates go all the way back down towards the zero bound if they mess it up, and they seem to be determined to mess it up.
Oh dear. Okay, so 5 cuts next year. You're basically with the market, or at least with Fed funds futures. That's a total of 125 basis points for 2024. Do you think that's going to be enough to stave off recession in the U.S.? I mean, you just got done saying you think the Fed is way behind the curve cutting rates.
Again, it depends when they start. If they start early enough, and Powell's rhetoric suggests they won't. If they start early enough, then maybe that might just about do enough. But it's not only about monetary policy. There's also a real fiscal policy problem here, in that the amount of credit creation that's going on currently is painting a recession for 2024. So they really need to get ahead of things, not only in terms of cutting rates, which is probably going to help to some extent stimulate commercial credit creation, but we also need to see really strong fiscal guidance, and we're not expecting that from US policymakers at all. So in theory, 5 cuts could do it, but the way that things are lining up, I think recession is a much likelier outcome next year. And I think that's what the bond market is telling us by saying that it expects 5 cuts when despite the Fed rhetoric.
Paul, you're looking for a major crisis to happen starting next year and through to 2025. Is recession just the beginning?
Well, so I think what we're saying is that if the Fed do suddenly wake up, if US policymakers and global policymakers broadly wake up, they can maybe make it a hard but not too hard landing. If they really leave things too late, then the cuts that we're going to see, the fiscal stimulus that we're going to see, is going to be in reaction to a really major problem. And once we get into that, then all bets are off, and that's when crisis going into 2024 is on the table. So we're not saying that crisis is certain, because it's still avoidable, but it's looking extremely likely if we don't get a major policy inflection at some point pretty soon.
Oh dear. Okay, Paul.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.